Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, I was hoping to, we would have some stuff going on here early on, but my machine was giving me a little bit of trouble. I had to restart it, which just wasn't. Sometimes with my my KVM switch, it doesn't detect the mouse and keyboard correctly, and so I couldn't even open up the start menu. It was really weird. So just bear with me here. I haven't started up all the software. So you just look at my lovely face here while all of the applications are starting up. Hello, Amir. Almost there. Well, here on the numbers, U.S. retail sales month over month, we got a reading of Spot 4 versus an expected reading of Spot 8, with core retail sales month over month coming in line with expectations at Spot 4 versus the expected Spot 4. So it looks like we are getting a reaction, though, in the market. Looks like the treasuries sold off initially off of this. Yes, sir. So seeing the headline retail sales be higher than expected is a little bit of a surprise. Man, I'm really mad that I had the issues, because, I would have liked to have gotten involved in that. Oh, and we got interest rates back above 3.5. It looks like interesting that the yield curve is a little bit of a complex read here. It looks like there was a tad bit of flattening, but not too much, and now maybe actually some steepening. Quite aggressive movement, really across the board, I guess you could say. The 10-year ZN holding up here a little bit, though. So I think I can let it sit here for a little bit. Let's just come and look at charts for here for a bit. It's like in the overnight session, they did move back up a little bit before this plunge. And S&P 500 still in a pretty tight range. Oil as well, although decent recovery yesterday. Gold and silver at the lower end of their range, not looking too hot actually. Cap falling. Concerns in China. Bitcoin kind of middling, and the dollar coming back to 102 but bouncing. That does not look like a super positive environment overall, does it? But the market seems to be holding up okay. seems to be holding up okay. I'm tempted to sell it, but I see a liquidity hole. It's, I think, a pretty good chance that we see a bit of a bounce here, so I will refrain for the moment.
Just taking a look at some market commentary from analysts here. So investors gravitated to havens, including treasuries and technology shares, amid the stalemate in Washington over whether
In ZN,
the debt, the
you
US
see how stuck they are at 03? Low resting liquidity. We've rotated around it a couple of, you know, the thing that I would point there is like we're less than 10 minutes off of the news, and now for the last 5 minutes or so, we've been stuck in a 2-tick range at 115.030, even despite there being actually quite a bit of activity level 2 wise and everything, right? That is a liquidity hole. And one of the things that I would note here is that we are getting close to the end of the contract. And when that happens, you start to see it do like I would call it frustrating things. Is just like it doesn't seem to move when it should, you know? It's definitely doing that. So I'm interested here. Let's come in to the CME. I've kind of been keeping track of like the open interest tools, but like not. I think I can see it through the quick strike. Let me see. Open interest. Okay. Interest rates. Yeah, we'll look 10-year. TYM3. That's the options open interest. I'm kind of more interested in the futures open interest. You know what I should do is I think it is. So, they've been talking about all of this, like there's a huge basis trade going on. We've been talking about that, right? I'm trying to sort out if there's a lot of interest in the next contract, because I believe that most of this open interest that they're talking about is in the front month, which means that that they're basically all making a play on something that will happen next week, essentially. So in that kind of a situation, it would be very difficult for the treasuries to move a whole lot. This is not the report that I want, though. I mean, there's some interesting information in here, but this is mostly the options. So I think if I come back to the cmegroup.com, I'm pretty sure that there is volume and open interest, perhaps. Oh, here it is. I want the commitment of traders tool. So you can see this asset manager institutional, and then leveraged funds have like this massive short position on. Don't understand options enough to get hints on flows.
So in 10 minutes time now, we do get the US Red Book year over year.
Okay.
Spot 3% as well. We do expect comments from Fed.
So, do you know what a call option is? No, we did kind of float back up there. Wasn't too big of a move here in the micros. Okay, so if you understand what a call option is and what a put option is, do you understand what a straddle is? Or a strangle? Yeah, so a strangle would be when you think that the stock isn't going to move, and a straddle would be when you think that it is. So a straddle would be like buying a call and buying both a put and a call, right? And then if it moves enough, the one will make profits to offset the losses from the other one expiring worthless, right? Okay. So, the kind of things that you want to think about here with like using those tools and trying to sort out how the options will affect the instruments and things like that is just a matter of thinking about those dynamics, like those specific trades, and like how you would carry them out and so forth, right? So like if a ton of people got in on a straddle, right, then in order for them to make money, the market would have to move a certain amount. And if the market doesn't move, then all those people are going to lose money, right? Okay. So now we have to go back out a little bit, and we have to think about the market makers, the way that the market maker goes about this, right? Because the market maker doesn't necessarily buy a straddle or a strangle or anything like that, right? The market maker, especially in options, doesn't have a whole lot of control, because they're just serving the people that want to buy them, right? So they're just putting options prices out there and essentially selling options to people, right? Okay. So if somebody's got a straddle on and I'm market making it, and so I basically have the opposite position of that. I have the strangle, right? So I'm betting that the market doesn't go anywhere, right? Well, what if that's wrong? What if actually I think that the market is going to move somewhere, but I just had a position on. I just got a position that says that it's not going to go anywhere. What do? Well, I hedge it, right? I hedge it by like buying or selling the stocks, right?
Says, however,
I guess a straddle is like a bad example, but so with the spot gamma, right? If somebody is buying call options, okay, so I'm selling call options, then I want to buy the underlying stock, right? Because if I'm selling call options and the stock goes up, then I have like unlimited liability, right? But if I'm hedged, then it doesn't matter. It goes up as much as it wants. I still get to sell it, right? Or I still have some to sell.
The video is on the feed for those interested.
Yeah, I still got the garlic. You're not the only one holding the bag. There was actually a bunch of people that actually bought a ton recently. Well, the
whether the banking turmoil
investor is speaking here
to the pullback in credit. We are monitoring.
I don't think we're at that hold rate yet. Is Mester pushing for a rate hike in June? That certainly seems like the way the market is moving here. I don't know if I can do anything here still. Okay, so anyways, so you're the market maker. You've sold a bunch of call options, but you've bought the underlying stock, right? So you're hedged, right? Not quite. Not quite. You're not quite hedged. Why is that? Well, so how do you determine how much of the stock that you're going to buy? Well, there's the delta, right? So you can look at how much the stock goes up or down, how much the price of the option moves based on the stock going up or down. Like theoretically it's like $1, but for expiration is different. Okay. Right. But then there's this other dynamic, right? Which is like the further you get, right? If you buy a call option and it starts going up, so like you're making profit and then it keeps going up, the amount of profit that you're making like accelerates, right? It's quadratic. Is I think the correct term.
Conditions still think right. The labor market is quite tight.
In other words, you would think that the value of your option goes up like this, so you buy a call, here's your break-even point, and you think the further in price it gets, the more money you make, but it's actually, it's quadratic. It's like this.
Monetary policy yet to play out.
There's a curve to it, right? There's convexity to it. Okay. And this, the curviness of this
is coming down,
is represented by gamma, is the Greek term that we use to represent that, right? And that is something that the market maker also has to hedge against. So as the stock starts to move up, the market maker has to buy the stock, right? And that can kind of trigger more buying and so on and so forth, right? So I always get lost in options. So if you feel like you get lost in options, it just means that you need to think about it more often, right? Because it's all training your neural network, right? Once you get yourself to the point, like just come in every day and draw these pictures. Like seriously. Here's your homework if you get lost in options. Come in every day and say, okay, here's I'm gonna make a little, that was a terrible drawing. Make a little chart here. This is the price of the underlying is the x-axis, and the y-axis will be my profit. And then I say, okay, buy a call.
Curb inflation and shortly expecting the US Red Book year.
What does that look like, right? If it's at my strike price, I lose money. And then as it gets above my strike price, I make money, right? Buy a put, same thing, but opposite, right? And then selling is like the different, it's like this one. Okay. Anyways, like sit and think down about them and say, okay, what is buying a call? What is buying a put? And draw those graphs like every day. And when you get to the point where you can like do it instinctively, I promise you that the options discussions will make so much more sense because you immediately know what they're talking about, like just intuitively without thinking about it. And then it's a lot easier to follow because the place that you're going to get stuck is I'm going to say, okay, I'm going to buy a call and this and that. And then you're thinking, okay, wait, but buying a call means that he can make money if the stock goes up above, you know what I mean? So it's all about training the neural network, right? Anyways, okay, so now that you understand all of these things about the options, right? Now just really quickly, a basis trade. Okay, basis trade is actually much more simple, right? A basis trade is that the value of the future is higher than the value of the underlying bond, right? Because the underlying bond, there's all of this uncertainty. And so the future kind of has to be a little bit higher than the underlying bond to account for that uncertainty, right? The same thing happens if you're buying forwards, right? It's in fact, the effect is even more pronounced in forwards, right? And so the tendency is the future will be higher, and the future and the underlying will kind of move together and converge on the delivery date. Okay. So what do? You sell the future and you buy the underlying. Okay. There's a problem with doing this. Okay. What if that basis increases? Like if something super crazy happens all of a sudden, that spread could widen, right? And you're short a certain amount, right? There comes a point where, because you're so leveraged, your temporary losses on that trade are too much and they close the position out. I mean, if you can hold it till expiration, then no matter what, because you just deliver, you own the bond, you can just deliver it, right?
Fed's message says we know that commercial real estate.
So then you can't lose any money on that, right? Okay. where you can lose money is if the basis moves up more than like your account can handle, right? What is the actual underlying of the ZN? Is it a stock or a yield? No. Okay, this is a good question. We've been looking at it this whole week and you didn't realize it. Right, so let's come back to these interest rate tools. Okay. The Treasury Analytics tool. Okay, so we came back to that liquidity hole at 03, by the way. Okay. So when you come in here into this Treasury tool and it says deliverables 10-year. Come in. There we go. Okay, so now this screen right here tells you a couple of things, right? So
US Treasury Secretary Yellen says default.
There is this cheapest to deliver
margin calls
and on the run. On the run means the most recently issued
default would result in
bond that is available for delivery.
Shock could lead to a recession.
On the run determined by finding the security with the latest issue date. Okay. Cheapest to deliver determined by finding the security with the max implied repo. Okay. So cheapest to deliver basically means if you own a bond and you're going to deliver that bond on delivery day, or once delivery becomes available, rather, you have a bunch of choices. Those choices are all of these ones right here, right? See how it says this is the maturity date and this is the QSIP.
Unchanged from May 12th.
Okay. And these are all ones that are maturing about 7 years from now, right? This is 2023 and it's saying 2029. So it's actually, it's 6 to 7 years away, right?
Fed's says I want to assess how much
Okay.
credit.
So this one down here that's golden, I believe it is the one with the max implied repo rate. Oh, it's this blue one. Yes, this one right here, 5/15/23. Oh, that's the one that was just issued the other day.
One spot
right?
billion euros of corporate bond
Okay,
purchases.
so that's the on the run one.
Holdings under
Cheapest to deliver ends up being the one with that's like,
to be settled 2000.
ends up being the one with the cheapest delivery years, although that can kind of shift depending on some weird stuff. Okay, but
ABS purchases.
okay, cheapest to deliver is the one that if you were going to deliver, you would want to deliver, right? If you were doing that basis trade, right? Okay, so this is the information right here. That's the QSIP. If you wanted to go and buy that bond on a bond investing website, you would use that QSIP and go and look it up. Makes sense? Right. So what's happening is these guys are going out and buying this bond and selling this future. Right. And what is the trade? The trade is, I think that I will be able to hold on to this trade until the delivery date and then deliver, essentially, right? And as long as the basis doesn't increase too much in that interim time,
ECB says lending to banks
I'm fine.
150 million euros
Right.
to 1 trillion euros.
Okay. Now I could also come in and I could use options to kind of do something, right? Like I could buy, I could be taking a position in the options and then selling a ton of futures against it. Right? I could be well, I don't know what you would do, but I would need to go back and see which options they're actually buying and everything, but I don't know how that got back into the options stuff, but I mean, that's I guess the whole point of it though was like, why are those tools useful? So that you can look at that information, right? Is like for the institutional trader, it's so that they can set that kind of a trade up and they can see, oh, actually the basis is like really big, so maybe this is worth trading it, right? For us, it's for us to understand like what's going on, and we can sort out that trade and then sort out what kind of flows that we expect to see on it, right? So like right now, what I'm saying is we're getting really close to the delivery date, right? It's basically like next Friday. Not this Friday, but next Friday. So they're basically betting that the basis is not going to rise too much in the interim, right?
This is my own forecast.
So like
Economic growth will
if
be well below trend
the
when
world
we are seeing
imploded
growth slow.
and the treasuries bought up like insane, like somebody dropped an atom bomb or something like that, then those guys would be totally screwed. But otherwise, they're really, really big. They're likely to just double down even more if you give them an opportunity. So only, you know,
back down with the appropriate monetary
buying it here is kind of a rough trade.
This year.
What do you mean? Why do bonds not have an actual clear cut open? If you come and you look at them at 820, there's always a little bit of a move there, right on their pit open at 820. And I wouldn't necessarily say that there's like high volume per se, but it's always like there's a little bit of a move starts at that time. Well, it seems like they're selling because of Mester, but I could have only have made like $5 on it. I'm not sure what to make of that. Yeah, well, what happens usually is, you know, they'll buy it up like 4 ticks or something, you know, so that might only be like 4,000 volume. Sorry, you're right, it wouldn't be all up. Okay, so I don't know if I answered that question completely. I think that we'll keep talking about it as time goes by, but somebody was asking, so I had a couple of questions. Okay, Andre, someone said that if I want Jigsaw and Rhythmic and Sierra/Denali, all I have to do is connect it once a month to verify my account for Denali data. I have no clue what they mean by that.
So in 10 minutes time now, we did get the US industrial production month over month forecast 0% on the prior of 0.4%.
If you're using Rhythmic, why would you be using Denali?
US capacity utilization forecast 79.7% on the prior of 79.8%. Manufacturing.
Oh, okay. So I think the answer here, Andre, is that you don't want to get both Rhythmic and Denali. If you're getting Denali, then you're going to use Denali, and if you're getting Rhythmic, you're going to use Rhythmic. So if you have Sierra charts, you're paying for Sierra charts and Denali, I would just use that. I don't think that there's a bridge or anything for Sierra charts, right? So they're not really compatible. Am I wrong? Hold on a second. But the whole thing is to only have one account and find a way for the applications to share the connection so that you don't have to pay the professional fee or anything like that, right? Or multiple connection fees. For some reason, YouTube is shadow banning the stream. I don't know. Sometimes that happens. I'm sure that it'll go away eventually. let's see here. So what are your options? Bitfinex, CQG, Gain, Interactive Brokers, IQ Feed, MetaTrader 5, NinjaTrader 8, Trade of 8, Rhythmic, ProTrader Pro, Stellar, and TT. Oh, TT REST API is trade history only.
US House Speaker McCarthy says there's been no progress in debt talks since last night.
Anyways, I don't think it really makes sense to have. I mean, like, if you have Jigsaw, then there's no point in having Sierra charts and vice versa. Right?
ECB's Holzman says I would have preferred 50 basis points.
Why does the 10 exaggerate FOMC moves, but the 30-year downsizes them as opposed to the numbers? I don't think that it's quite so clear-cut as that, right? Oh man, so we're going back into some complicated topics, right? That's not what you're probably gonna. In fact, generally speaking, the 30-year does tend to move more than the others. Okay. But really what's happening is like this one's moving like this and it like kind of whips until you get over to the 30-year and it's really big, right? Because if I come in and I change the interest rates, if interest rates change 1 basis point, right? That's over here in the 5-year, right? That's only 1 basis point change. You know, that's 0.001 0.001 times a million or whatever is the change in price, right? Times 5 because it's a 5-year, but it's times 10 over here and it's times 30 over here. So a small change in interest rate results in a big change in the value of a bond when you have a 30-year bond,
We reach 4%.
right? But there are some times where because it is anticipated that it is like a short-term or temporary change, that the 5-year will be more sensitive to it than the 30-year would normally be, because they say, well, yeah, but this is something, you know, this gets delivered in 30 years and this is something that's only going to matter for like the next 6 months or something like that, right? And so you get the yield curve. And what does the yield curve tell us? Well, a normal yield curve is kind of, if you start, these are like 0, 5, 10, 30.
And
Okay.
5 minutes away now to get the US industrial production month over month. Forecast 0%.
So now
4% with
in a normal yield curve
minus
is
0.3%.
kind of gently sloping upwards like this, and the further away the maturity date is of the bond, the higher of an interest rate you get to reward you for locking your money up longer,
0.53%.
right? Now, in the market that we're in right now, it's kind of flat. But why is that? It's because they don't, because right now the interest rates are high, but they think that eventually they're going to come back down, right? And so it matters for like a 0 and a 2-year. I'll put a 2 right there, you know, for like a 0 and a 2-year. That's still, but like, you know, 5, 10, it's not going to matter, right? So the 10 and 30 don't come up here like this, you know. Okay. So really what you're actually seeing is the change in the yield curve, right? So how do you actually transact a yield curve trade? Well, if it's a steepener, okay, so I get the point of this was to establish this is a steep, this is steep, and this is flat. Okay. In other words, steep is when the difference between these two is increasing, okay? And flat is when the difference between, you know, so we're talking about 2 points on the yield curve, right? Flat is when the difference between these two is small, is decreasing, okay? So flat would be sell the 5, buy the 30, okay? So kind of depends though. The thing is that you can have the yield curve steepen or flatten, and also with yields increasing or decreasing. So you actually get like, you know, 2 different scenarios essentially, because, or well, 4 different scenarios, because I could have all the treasuries are moving down and they're flattening, or I could have all the treasuries are moving down and they're steepening, and vice versa. If the treasuries are moving up, that's flattening, steepening, flattening, right? Okay, so like what's happening today? Today we're steepening a little bit. Okay, you can see it right here. The 30-year is down 1 tick, and the 5 is only, since we last reset it at least. Okay, and we're moving down. Okay, so we're steepening, so that means buy the 5,
ECB
sell the 30.
inflation unlikely to slow much more this year.
We're steepening, but rates are going down. So what does that mean? That means that the 30 is going to sell more than the 5, right? What's going to happen is they're all going to sell, but the 30 is going to sell more, right? So what you're going to see right now is like the 30-year will kind of seem to lead. And you're going to see that market volume in the 30-year because of the way that the spread goes, right? Okay. Now, the other thing that I want to point out is that the 10, now I know that this is getting like really, really, really deep, okay? But it's so useful if you're doing the treasuries, okay? The yield curve, if we come back and we look at the yield curve, there's kind of a hump, okay? So this hump here tends to be between the 7 and the 10.
1 minute remaining now, lead with the US industrial production.
Okay. So for some reason, there are funds out there that are more interested in doing business in 7 to 10-year yields than they are in other areas. Okay. And so the result is that a 5-year, a 5, a 2, and you know, there's the 5 and the 2, and then there's the bills. Okay, there's this section of bills. So really, you can kind of divide the yield curve up. Let me redraw this. You can kind of divide the yield curve up into kind of 3 sections. Okay, which would be the 7 to 30 area over here, and the 1 to 7 over here. And then these are like these are bills. These are less than 1. Okay. So the 10-year tends to act a little bit more like the 30 than it does like the 5. Okay.
0.5%, 0.5%.
Because of this hump.
0% capacity utilization,
Okay.
79.7.
So in a situation like right now where we're moving down and steepening, I would expect the 30 and the 10 to be very active.
Forecast of 0.1%.
And that is what we're seeing. I mean, there was a pretty decent amount, 20,000 contracts short, and wow, look at that. I mean, this is very active. Now it's getting to the point where if I had taken a trade, it would have been worth it, right? That was a little bit, So then I was hearing my news squawk say something, but I think that they were just kind of summarizing. Okay. Mitch McConnell to hold a press conference. Oh, I don't know what he's going to talk about at 10 p.m. Eastern time. Oh, 10 p.m. Eastern time. So that'll be like long after. Okay, at 4 o'clock Eastern time, after the market closes, essentially, they're going to have their meeting again with congressional leaders and the president. And by the way, note that after that, the president goes on like an 8-day trip. So like
April 2023, full report on the newsfeed for those of you that aren't.
I don't know how this still goes through unless that meeting is like really good. Okay. Okay, so anyways, back to the original question. So the original question, you say, why does the 30-year exaggerated by the 10-year doesn't? Well, what you may see sometimes is we're going to move up and it's a steepener, right? Like when the economy starts to get bad and we think that the Federal Reserve is going to back off and everything, then what you should see is the treasuries buy and it's steepen, right? And then what you're going to see in that instance is the 30 years going to lag a lot, right? And that was kind of what was like happening the past week or two, and so that's probably why you feel like that's happening. But I'm just saying that's not always what happens. That's just what's happening right now because we were steepening and moving up. Right now, it's not that. Now it's the 30 years moving more aggressively than everything else, right?
4%, 0.24%.
Should do an options information series. Okay. I've never made videos like that because there's just so many videos about that stuff out there, right? Am I really good at explaining things? No. I don't actually think that I am, but if you're watching me a lot, it's probably makes more sense to you because you've already kind of been getting the neural network training from watching every day, you know? My issue with options education is that they focus on the strategies and not the microstructure and liquidity provider concepts. Yeah, well, because the things about like what is a buy and a put and a call and all those things are probably assumed, and like the structure underneath part, they don't actually understand how it works. I tell you what, it's a little alarming how many retail options traders don't realize that, you know, like the way a limit order book works. Because, for instance, yesterday I saw somebody saying, well, you know, if you're going to put a stop in options, you might want to put a stop limit. Because they're saying, well, you know, I wanted to, if it got below 10, I wanted to sell it. But I put in a stop order and all of the liquidity pulled. And so it executed at 6.
ECB's Holzman says the ECB can't.
And he still made money, but like, you know, that's like $400 or whatever that he lost, right? Well, okay. So if you put it in at a stop limit, though, you're just going to go on the queue and you're not going to get executed, right? Unless that price is still bid. Unless that price is still bid, you're not going to get executed. And then it keeps going down and then you just lose everything, right? Because you're stuck. Why do some news like JOLTS and FOMC reverse the move on bonds compared to the ESNQ while CPI and employment, they move in the same direction? Oh, well, it depends on each. You'd have to look at each individual situation, right? Why those particular pieces of news were driving order flows in the direction of those flows, you know? But I think right now the dynamic that you're seeing is that like almost all of the economic data, it keeps looking bad except for like employment and I guess retail sales now. But like all of the business surveys look bad. So that's kind of the dynamic that you got going. Right. 115 even. I tell you what, we've been at these prices so many times this year, haven't we? Like 3.54 is like, oh yeah, we've been around there many, many, many times. So it's not like I couldn't have taken a trade through all of this, but I kind of, yeah, you know, I think the mistake I made was like I came in and I'm like, well, I'm late. I guess I can't do anything, right? I didn't see Mester on the calendar here. Yeah, I did. Mester was not on the calendar. I see Bostic, but not Mester. investors seemed to really throw a bomb in here, so that was like unexpected news for me. And then it had already kind of moved, and then it was too late. So like now I'm chasing. It could go further. I just don't like that price. Like I really don't like having to buy at 3,545. Yeah, I bet you got me beat like big time. I bet you probably took a really good trade, huh? Wait, so if you went short, what price did you get? He's gonna tell me some number and be like, you did not. Oh, 06? Okay. That's probably what I should have been taking, right? So, yeah. Oh, but you already got out? I'm still curious about that fall, you know? I think let's not say normal circumstances, but like all other things being equal, that little drop would be something that would kind of fill back in, right? But I don't 100% understand what triggered that fall in the first place. It could have just been a stop run and it's over. But it could also be something that continues, and so at the moment I don't think that I have a very good read on like, will there be more? We'll say we sold about 25,000 net contracts, and since then, at least in ZN, the cumulative delta's kind of been sideways and, you know, a little bit wavy or in range here. So I don't have the support for like this is going to be a trend day sort of a thing, which is what I think I would need to be saying if I was going to start selling at 115 even. I don't remember that. I'm not sure I remember what you're talking about, NASDAQ. Okay, so wait, let me come back here. US retail sales month. Oh, right. Oh, wait. That actually does not. I'm confused now. I just could have sworn that the actual was 0.8 and the estimate was 0.4. So retail sales disappointed. Now I have to go back, guys. Help me out here. Because I've been watching this whole thing with like, okay, so Fed Semester has been speaking since 6:15. So was it that the retail sales should have suggested buying and then Mester came in and blew things up? Yeah, I'd have to make a real trade in ZN to trade against him. None of when I'm placing stuff up here in the ZN, that's all sim. It's the only real trades are done in the micro tenure. I'm trading super tiny. I like getting done before the equity opens. Yeah. Weak tax refunds were expected to weigh on retail spending going forward, but perhaps not quite yet, as expectations were for a month-over-month rebound from March's unexpected decline, with omniscient Bank of America forecasting around consensus. And rebound it did, but the headline print was disappointing, up only 4% month-over-month versus 0.8 expected, but core and control group data were better than expected. Market seems most focused on the control group's beat, with 10-year yields up 4 basis points post-date. It really is. I feel like if you're not positioned before, it just gets more annoying after the equity open. Yeah. Like, it's, unless it's a trend day. Unless it's a trend day, usually that first hour is the best, right? Unless there's like 8 o'clock news. Or yeah, unless everything blows up or there's 8 o'clock news. But there's definitely been times where like I'll take a trade and I think, this is a trend day, and like it goes good, but like, you know, the first hour is the best of it, and then I end up like sitting in it the rest of the day and nothing happens and I give up on it, and then after I give up on it and I close it at the end of the day, then it moves in the overnight session or something like that, right? Or it moves 2 days after that. You can definitely, I mean, bonds are very trendy. Look at that. So they've kind of been flat there at 31.5 for a while, and now it's ticking down and threatening another push. It's not quite going though. Okay. It was a little suspicious. He opened a Treasury Direct account and said he was going to bid on the next 20-year auction. Actually, that's a really good way of doing it. Totally. Oh, out there it went. I looked away for like 1 second and the stop run happened. I missed it. Dang. Well, why you don't even necessarily have to bother going that far. You could just put them in I forget what they call them, but it's definitely like the banks I think the banks are really shooting themselves in the foot with this. I really do. Like, how do I put this? I think there's a bit of background information that you have to put in there, right? So like, the interest rate that the bank gives you on your savings account does not necessarily equal like the federal funds rate, right? They kind of lag them by quite a bit so that they can still make money, right? So we're in this situation where like interest rates are like 5%, but oh my gosh, what's going on here? Something monster just happened there, guys. Wowzer. I am definitely not touching it now. What the F was that? That was massive. I don't know, we have a 52-week bill auction. When I see like really, really big numbers like that, I'm often thinking, is there an auction today? I don't know if a 52-week bill auction would make that happen. That was nuts. oh man, okay. So there was huge icebergs at 30 half and 31. There was 5K absorbed at 30 half, and there was 8K absorbed at 31 on the offer. So we saw like a good 15-20K worth of lots go through there, and then it ended up reversing very, very hard afterwards. There was like no news. That was a really weird and unexpected flow. A market pulse indicator, what is that one about? I always have 10K in the I bonds. No. So like oh, I don't know. I don't use those sorts of things. Anyways, okay, so let me backtrack here a little bit, okay? So like right now the interest rates are really high, but you aren't getting that interest rate if you have your money in the bank, okay? Because the banks kind of lag it so that they can make money and everything, and they kind of have to. Otherwise they would like lose so much on certain types of things, right? But right now, what's happening is people are like, well, especially if you're a company or you're rich, you have more than 100, you have more than the FDIC limit in the bank. It's kind of like, why keep it in the bank? Why not just manage it yourself by continuously buying treasuries every month? Like what Uzi's talking about with his friend. You have 20 grand and you don't want to do anything with it. I mean, you don't want to like lock it away, because you could just buy I bonds and lock it away for a long time and get a pretty decent interest rate on it that way, and that's like easy peasy, right? But your money's locked up. So you just do 30 days and every 30 days like rotate it, or you know, you do there's all sorts of crazy stuff. Like I one way to do it is to do like a 1 year, but then like you buy them every month and build a ladder. Yeah, build a ladder, manage it yourself, right? So the issue is that in a time where there is a lot of concerns over the banks are not giving depositors any incentive to actually keep their money at the bank, right? Like we're kind of looking at a situation where maybe 10 to 30 years from now, the whole idea of like you keep your money at the bank won't exist anymore, and banks will be lenders only, right? So if I was a bank, I would be giving people, the better rate, like some of these, like the Apple Car and Marcus and stuff like that. I would be giving them the good rate, because otherwise, why keep your money in at all? Warren Buffett likes staying in cash. I mean, I've seen a lot of content from like rich influencer type people talking about just managing that stuff yourself. They seem to think it's fun to build the ladder out in treasuries and stuff. Geez, so now at 02, there's a big old fatty order there, and we traded a 3K iceberg at 01 half. I am definitely like just a spectator now, man. That is so fascinating to me, but I have no clue what's going on. There was a time where seeing something like that would make me want to try and trade it, like get involved in the flow, but You mean that real estate dude? Who was it that I was seeing talking about it? It was, is his name Alex Hermosi, something like that? No, not Graham. Not Graham. You know, so so weird thing about Graham, because I never really, so here's my read of Graham on the politics side, although he keeps it very close to his chest. My read on Graham Stephan was he was from California. He was not really politically motivated, made a ton of money, started to realize that liberal policies were not very good financially. Right. But I'm seeing stuff with him and Brett, what's her last name? I forget what her last, Brett Cooper. I'm seeing an interview with Graham and Brett Cooper. So Brett Cooper is on the Daily Wire. It's like the big conservative social media place, right? So that was kind of curious to me that he was all of a sudden willing to associate with somebody so political. So does that mean that Graham Stephan is actually like quite conservative? Don't know. Yeah, get woke, go broke. I don't know. But no, it was guys like Alex Hermosi and some of these other people that are kind of like, you know, some of their content is, this is what it's like being rich, right? And he was talking about creating a treasury ladder and managing the cash yourself. And I was like, man, if Alex Hermosi is talking about it, that means there's really something weird going on in the banking system, right? that the rich really do not feel comfortable keeping their money in a bank. It's a real problem. A real problem. Hey, Alexander, how's it going? Oh yeah, Financial Juice. I have a Financial Juice affiliate link in the video description. If you guys need a news clock, I should always remember to mention that one. Do most of these regional banks allow for crypto? No, I don't think so. I mean, I highly doubt. Okay, after that huge pop, it's come all the way back. I've been better. I think I'm past being sick, but I'm still like you can hear it there when I wasn't laughing. Like my body is still acting like it's sick. If you think about it, my portfolio should be more allocated into treasuries. Rates are favorable when I trade the futures products. Yeah, I don't know. It's a tough call still. Like the call as to whether you should do stocks or bonds is, I think, always a tough one. You know, because there are certainly situations like with the I bonds, right? When you were getting like, what was it, 5% or something on the I bonds? That's a good deal. You know, hey, no matter what happens, you win, you make 5%. It's true. But you might make over that same period 30% in stocks. And there's just like no way to know. You know? Well, I'm still like sitting on my hands. I'm like just really scared to touch it here, man, but at the same time I feel like it's gonna sell. Now something's holding me back. I think that we had that huge pop. The pop went higher because of the inverse sine law, but I'm not seeing the volume anymore. So like, You know, it could break lows. I don't know if I should read too much into that if it happens. The 5 years certainly moved there. Flattener, huh? So coming back here, so it looks like that the market read the retail sales number, even though it was worse than expected. They read it as inflationary, and so the treasury sold. But then there was also Mester saying some stuff, basically like suggesting this shit. She doesn't think that we're at a rate that you just hold yet. Okay, so that may have also been some other some of the follow-up selling, perhaps. There's the McCarthy situation. I don't know if that's too relevant at the moment. That'll be later today. Oh geez, now what's going on in the S&P 500? Dude, am I missing like a piece of Ukraine deputy defense minister? Ukrainian forces have reclaimed about 20 square kilometers around Bakhmut in the past few days. Well, I don't know if that matters. They keep saying that they control it. Well, they're bragging about taking stuff around it, and Russia's bragging about taking it itself. So I don't know what that means. I don't think that's what that is. I should still be short. Says Uzi. Sure looks like it, doesn't it? The 10-year is not going, but the 5 and the 30 are, and they're really pushing, man. This is frustrating for me because, you know, I know that I could just come in and have bought anywhere in through here and probably be okay. But if I don't really understand what's going on, I don't think it's a good idea for me to get in anyways. Like, I'm just going to leave it on the table because I'm just going to get really emotional if I get in, right? Yeah, it was a good exit regardless. And like I said, I don't know if a small breach of the lows there is significant. In fact, you know, the volume kind of suggests buying in the treasury. Anyways, I was going to say, like, when I go to zero hedge, I do not see anything about Mester. So that in the equities would really make me think that there's like something going on, but okay, with the bonds, what about corporate bonds? How do you go about buying corporate bonds? Okay, so with a corporate bond, you're going to get a higher yield, generally speaking, right? And what you have to consider with corporate bonds, so the curious thing with corporate and municipal and all these other kind of bonds is that default is actually quite rare. Okay, like they're pricing things on default and the risk and things like that, of course. But usually what actually ends up happening is you take a temporary loss. Like if you buy it and you hold it to, you know, the whole time, then you make whatever the rate is. And if you're buying like junk bonds, you can get 10%. You can get 10% on junk bonds, right? So it's actually not a terrible idea to go and buy junk bonds, as long as it's a company that you're confident is not going to actually go under, right? But there's a lot of detail, and like there's like huge books about how to go about buying them, because the issue that you get into in that world is like there's so many options, right? Because it's like, okay, I could buy any one of 500 S&P 500 companies bonds, right? And then each one of those will have different QSIPs, bonds issued at different times. And so how do you pick the one that's like the best price and stuff like that? That's really complicated. But and I think the part of the thing is that because of COVID and everything, junk bonds kind of like had a really hard time, you know, and in this inflationary environment, they've had a really hard time. But I do wonder if a time is going to come where the junk bonds are a good buy. And do institutions buy? Yes, absolutely. I mean, the debt market is a huge market. They're trading large amounts here in the treasuries. I do not know what is going on. I'm very, very concerned that this behavior will end up like, no, I think if I'm making a trade, the trade that I should be making is on it coming back to 31.5 over and over again now. So that does not give me anything to do over here in the micros, unfortunately.
At 10 a.m. Eastern Time,
RTY has been least following the other indexes. Yes.
Forecast of 0.
Like RTY was the winner yesterday, paradoxically.
HB housing market index.
Well, the S&P 500 is coming back down.
45. We also expect comments from ECB's Lagarde, who gives a laudatio for conferral of state prize of North Rhine-Westphalia to Angela Merkel in Cologne, and Fed's Barr, who testifies before the House Financial Services Committee in its semi-annual hearing on
when I look at my watch list, natural gas is up at 3.63 and oil is up at 0.4%. And there's a couple of the currencies that are up marginally, but pretty much everything else is down. So I would say, and the man, oh man. That thing in the S&P 500 shifted back down with vengeance. Wow. Nah, you know what? I've never been able to find I do not find the technical indications of correlation or co-integration to be as useful as just looking at the two charts next to each other. On like a longer term basis, those statistical measures kind of make sense, but I think it's just the time frame. I think that there's just too much noise within the time frame to sort those things out. That you really have to predict it. You have to say there's going to be this movement that's going to cause this one to go this way and this one to go this way, and they're going to be very correlated. It is a wild market. The S&P 500. Okay, well, so I think that the chart is deceiving me a little bit because it is only like a 10-point range, right? But it sure flipped back down super hard, didn't it? And in a way that really makes it feel like that like the market's being moved by news, but I don't think that's what's happening. Okay, so theory. the market is starting to trade the debt ceiling. Because I'm very skeptical that they get a deal for the debt ceiling. Like, I think what's going to happen...
And the live feed to FedSpar...
Here's what I think is going to happen is they're going to have their meeting after the market closes, and, like, nothing's going to come from it. And McCarthy is going to come out and is going to say, like, this does not look very good. And then the market's going to start getting nervous. That's one theory. And ignoring, I just didn't see it. Maybe just a short squeeze, like I said, NQ new yearly. Oh, is it really? Let me come back over here. Oh, yearly highs might make sense. I still don't think that explains both the amount of volume and the whippiness that we're seeing in the equities. It really sure. Okay, so yeah. There's still kind of this peak from last August, though, that it might have exacerbated the long. But why did it flip back down so hard? And why is there so much volume behind it? I mean, look at, there's like some big absorptions in here and stuff. And more importantly, what was these huge trades in ZN that kind of caused that to whip? Like something happened in there. That's some artsy chart. So what do I have here on this chart? I have the 50, 100, and 200 day moving averages. And then down at the bottom, I have
month over month forecast at 0%
range as a percentage.
US
and the average true range as a percentage, which is that's multi ATR indicator as a part of my paid indicator suite
from ECB's Lagarde.
Okay, so that's actually like a pretty effective way of looking at the volatility. That's why I put it on there.
Gives the Laudatio for conferral of,
and I have what appears to be a Fibonacci level indicator on here.
And FedSpar, who testifies,
but what it actually is
committee in its supervision and regulation. We have.
I actually need to adjust it.
On the feed
That's funny. Because it's a new issue, I have to adjust it. But basically, it's showing me what percent of a pullback from all-time highs is it. So I don't know. Maybe it's just a coincidence, but do you see here where in August when we were doing well, it came right back to 10% and then faltered there? So these are all kind of things that people talk about in the market a lot, so that's why I have them on there. I don't think that these moving averages predict anything, but people talk about them a lot, so. What are you showing me here, Lucas? Okay. Well, you can do that fairly easily in NinjaTrader. They're moving to new lows, and the 30 years just getting creamed here, but I am still of the opinion that I don't understand what's going on, and I'm just gonna sit on the sidelines. So to distract myself and make myself feel better about this, I will show Lucas how to do this. I think he wants a 1 minute chart. Okay, so we'll zoom in here really, really tight. And then we can come into data series. And let's just start with 1 for now. Okay, so now I got the NQ. Oops, I want it to be on a 1 minute. Okay. Now, he has it as a line, so let's just change it to line on close. Make it more like, why not 4? Make the line kind of a, we'll make it like lawn green. Yeah. Okay, so now I drag them on top of each other. Okay, so you get something like this. Now, I think one thing that I can probably do...
1 minute remaining. I'll lead with the US business inventories month over month.
I could add 3. I'm just trying to get it to look right with the one that I've got on here. Okay, so then the next thing is that I can come in and mess with this range, right? I think I can. So for instance, I could just move this up and down, right? Da 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 da. Okay, but then I mess up the scale of them.
Minus 0.1%, minus 0.1%, lower than the forecast of 0%. NAHB housing market index 50, 50, higher than the forecast of 45.
What I've got to do is get them both scaling as percentages. Wait, oh, okay, I have there's left scale and right scale.
We have posted the US Business Inventories March 2023 full report on the feed for all those interested.
Well, to normalize them against each other, I would maybe I could add an indicator. Yeah, the NT scale implementation sucks for sure, but you could do it programmatically, right? You could even make bars that are like percent bars. That actually, maybe I should make that. But you can add as many as you want. S&P 500 still falling here. And it does look like, despite that little bit of a slip there, that the treasuries are still like right there at 355. So I am kind of stressing out over ticks here. Anyways, you can mess with it further from there. Maybe I'll make an indicator. That seems like something I could put in my free pack that would be useful.
A Washington Post reporter has tweeted that concerns are rising.
I mean, does Sierra Charts have that built in though? They might have that built in.
That they fear rewards the Republicans for taking the debt limit hostage.
I would say that it would be a lot easier to write. You know, if it doesn't exist, it'd be a lot easier to write it in NinjaTrader than in Sierra Charts. I don't know, man. The way I don't know how the Ninja Trader thing is gonna go. So I think that this is probably more like Seth's trauma. You know what? When I look at a lot of things about society, I often find myself saying, oh, these were the guys that in high school were da 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 da, right? Like, well, if you are a white male and you feel that you've been oppressed in some way, right? Probably the reason you feel like that is because somebody made fun of you in high school or something. That's where that kind of stuff comes from. So it's like some people never get over the trauma that is inflicted on them when they're younger. Like, especially if they felt socially outcast in school, some people just seem to never get over it. For me in school, I had no clue what was going on and I didn't care. So I don't think that I got trauma from that, but I did get trauma from later in life. And like, especially around my late 20s, right? So one thing that happened that I think traumatized
The Russell 2000 drops one.
and this is going to sound silly to call it like a trauma, but freaking Unreal Tournament 4. Jeez. Okay. So like Epic comes out, oh, we're going to be making a new Unreal Tournament, and it was super great, and we put so much effort into this thing, and like I edited a podcast every weekend, and it took hours and hours of work, and all the work that I do on the weekend on this stream, I kind of got in a habit from doing it for that podcast. And then in the end, the project wasn't very successful and they didn't finish it. And in fact, even recently, like, you can't even get it from the Epic store anymore. Like, you can like download and build it yourself, but you can't really get the Unreal Tournament thing, right? Okay. So when that project kind of died down, what happened was, we need to pause development on this because they needed people to work on this kind of mod thing to Fortnite Battle Royale, right? And they moved over to that. And so like I downloaded it and I tried it and I was like, I just want to play Unreal Tournament and I just don't freaking care. And so I just ignored it when like honestly at that time I was one of their top creators, so like I could have become a top creator in Fortnite and probably quite frankly made enough money to make a living off of it, although probably only for a short time. Probably wouldn't, and then I'd be stuck. Who knows what I'd be doing then. Okay, so maybe it's a good thing that I didn't go down that, but so that has happened to me before, right? And I would say it's something that I mean, it's not like it traumatizes. It's not like I sit there and I think and I cry about it. Oh, I'm third of it and it's so awful. No, but it's like it's something that definitely like sticks out in my mind. Okay, and that I think about from time to time. And when I think about Ninja Trader, I think of that because like right now, I'm not too happy with the state of Ninja Trader, to be honest with you. Like, I don't like the kind of the path that they've gone down, and a lot of people have been having brokerage problems with them, right? So it's like a lot of people are moving away from Ninja Trader. I'm actually seeing a massive number of people move over to Jigsaw right now. Yeah. Well, I don't know if their brokerage customer support was ever really super great, but I think that it's kind of like the common growing pain though, right? Like this is what tends to happen to companies when they start going for the larger demographic. And will that work in the futures trading space? Well, I'm kind of starting to think that it might, because my understanding is that Robinhood is like currently in works to make an FCM arm, and that you're going to be able to trade futures on Robinhood.
China's offshore yuan falls 0.5% to 6.99.
Now, there's your move.
Versus the dollar.
There's the move that I really had like a good chance to do, and I said I wasn't going to do like 5 times, right? Yeah, well, it's been since they acquired Tradeovate, but like all of the things that you're seeing are things that I would expect to see from both moving to a web platform and transitioning to a web platform, and like increasing your consumer base a ton, right? So like the issue that I see, or the thing that I think about is like, no, well, why would I go to Seer charts? Is that I lose interest in NinjaTrader. I guess I'm not doing this, but like I the way that I've seen this go before is you say, oh my gosh, NinjaTrader is so awful, I am going to completely abandon NinjaTrader and start bad mouthing them and yada yada yada, and I'm going to go over to Seer charts or whatever the deal is, and then NinjaTrader ends up becoming the industry leader and gets like super massively huge and has a huge base because of a retail flood into futures trading, right? Like that's kind of what I'm thinking might happen, is that right now, while all of the like those of us that are super into the futures and what would we call it, like the prosumer user base or whatever, you know, the highly engaged user base, like the moment that we abandon NinjaTrader is exactly the moment that it becomes like this nationwide phenomenon sort of a thing. So why would I care if that happens? Because I want to help retail traders, and I have a lot of content around NinjaTrader. So
CEO Diamond says recently.
Basically, the question is, should you make more or less content about NinjaTrader? And it seems to me that I should continue doing what I've been doing. Although I will be making a lot more content about Jigsaw. Weeding out a few things, but I anticipate that I'll be making quite a bit of Jigsaw content here. The treasuries sure seem like they're puking hard, aren't they? This is a really hard read because, well, let's just come back here. When you look at this move in ZN, you know, from like there was this puke right here, okay, but ever since then it's actually been slightly up in cumulative delta, despite us continuing to push further and further down. Now from about here, so this is where I said, okay, here was this puke right here. This is from the point where I said, oh, I could take a trade, but I'm not going to. And there was a point where I was like, oh, I'm really glad that I didn't. And now here's a point where it's like, oh, I wish I had. But this right here is only $10 for me. So it wasn't, you know, it wasn't that big of a loss for me to have missed it. But the flows that we're seeing here are still quite complicated. Now, when you look at the 5-year and the 30-year, it's a little bit different. The 30-year has been selling the hardest, and so you can see the volume over on the 30-year is like massive, right? It's easier if they're all just they're all doing the same thing in volume, but that's not quite how it's going at the moment. So I'd say it's still a hard read. It looks like the Japanese yen is really moving. It looks like the dollar has been really strongly moving up. So the question is it going to keep going? Is this a trend day? And I think that my conclusion at the moment is, with the way that happened and everything, and especially since, like, look, they've already kind of recovered this down move, I think that there's still a risk of you getting pinned at 31.5. So I don't know if a trade is worth it at the moment in ZN. So I'm going to continue to be hands off. I don't think I'm going to take a trade today. I just don't think I think I stumbled too much. I stumbled too much in my getting ready and coming in and talking and everything else to have taken a trade, which is really a big failure on my part. Big failure on my part, because I could have, when I came in, it was like at 520. I probably could have made some money on this today. I don't think that I would have made a big one, but I definitely could have made money on it today. Now, Raymond, when you say JT tools, you mean the jigsaw, you mean like the versions of the jigsaw tools that open up within NinjaTrader, right? Because I can't see what would cause the incompatibility, but it doesn't surprise me that they don't work over there. They certainly wouldn't work in the web interface. Certainly they wouldn't work in the web interface. But you're saying that it doesn't work in 8.1 desktop? Well, it's interesting. But, I don't know if Jigsaw would spend the time to fix them. Because why not? Why not just use the Jigsaw standalone? I'm gonna avoid the ever-loving shit out of upgrading an NT8. You would probably be fine. It won't even load. Not sure why it would not work though. The thing is that, like, the problem that I'm having with NinjaTrader 8, I may be like the only person that has a problem with that, right? I think one of the things that really turned me off was, like, I tried talking to their ecosystem support about it, seeing if there was anything we could do about it, and they didn't seem too interested in, doing too much to accommodate it. That's why I was like, well, maybe I don't really need to do too much with NinjaTrader. But like here's the thing. I'm not like, it's kind of funny to think of me as an influencer, because I'm not the guy that, like, NinjaTrader goes, oh, okay, we need influencers, we're gonna pay them a ton of money, okay, let's do stuff. I don't think it goes down that way. I could say all sorts of crazy things. You never know what's gonna happen tomorrow. Like, the nature of the stream is such that it's kind of a more volatile thing. You know what I mean? But I'll continue to make NinjaTrader videos. I will. Even NinjaTrader desktop ones. But I do wonder, because I think one of the big things that led to NinjaTrader's success was just the fact that you could download it and use it as long as you wanted for free, just not submit live orders with it. I think that was a major factor behind its success. And that you use it in all of the combines and stuff like that. So when I look at it, I'm like, well, but are people really going to use NinjaTrader? Well, it's hard for me to say, because these people that are going to come in and are going to be the next group of retail futures traders
Fear and greed index,
are probably going to be
58 out of 100,
very
decreased
different type
greed.
of demographic,
Fear and
right?
greed index 54 out of 100.
Probably going to be a very different type of demographic, and so I'm not 100% sure what will drive them. They may be extremely motivated by doing the combines, and if NinjaTrader's the platform for that, then it becomes for that reason, you know. All I know is that right now I'm seeing a lot of people coming, you know, like 10 times the number of people that usually do moving over to Jigsaw. And I'm sure that there's a similar influx of people into Sierra charts. Thankfully, I have a lot of tools I'm committed to. Yeah, I have a lot of stuff that I've built on NinjaTrader, but I don't think it'll take very much for me to be able to move over to Jigsaw completely. You know, the only thing that would keep me back from going over completely is just the ability to make custom stuff in general. Well, it looks like maybe the S&P 500 is finally digging itself out. And it does look like the treasuries are kind of starting to find an equilibrium point again. It's not quite as high as it was, but somewhere around 30. Yeah. If I move, it'll be TT. Yeah, there you go. Like the thing is, I guess the reason why I think about it as much as I do is because
We expect comments from
the indicator suite that I have for NinjaTrader is really good. It includes a lot of essential tools that do not come with the platform that retail traders neglect, and will help a lot of retail traders with their trading, you know. And I really do, like, at the moment, I'm just saying at the moment, while things don't look very good for NinjaTrader, I think that you might be really surprised. I think that like all of us, you know, that have been around for a long time are like, oh yeah, NinjaTrader is like abandoned NinjaTrader sort of a thing. I'm not sure that's because I've fallen for that one before. And that was like exactly the moment at which it became like huge, you know. So brace yourself, because I tell you what, if that does happen, if Robinhood becomes a futures broker and all of a sudden retail traders finally wake up to how good of a deal futures are, micro futures are for retail day trading, intraday trading, and it becomes as popular as it probably should be, right? It's going to be to those of you that have been doing this for a long time, that's going to be to your advantage big time. So, you know, and if you, you know, you give up on those things like right before it happens, you know, you're going to miss out like I did with Fortnite. Never found a platform that is ideal like right now of Jigsaw, Ninja, and TradingView. Oh yeah, well, you know, one of the things that irks me with NinjaTrader, all of the futures trading platforms, is that I can't get like free delayed data, right? Like I wouldn't expect to be able to get the VIX live and everything, but I don't understand why it would require me to pay a data provider to be able to get it 10 minutes delayed. You know, like on TradingView, anybody can get that data 10 minutes delayed, right? And so if I want to, especially if I want to look at like really high view, or I want to look at stocks, I always end up pulling up TradingView when I would rather be able to do it all within Ninja. Yeah. Casey Trade. Well, yeah, because they made the small exchange. Why is 8.1 so different from 8? Is it a rewrite? Okay, so no, yes and no. So there's two major things that happened in 8.1, okay? The first thing that happened in 8.1 is that they switched the licensing check. So instead of it being all internal, you have to log into their online platform, and then the online platform tells the software which license it has. Okay, so that's the thing that affects me, because I have a ecosystem license. Okay, ecosystem multi-broker license, but that multi-broker license doesn't give me Rhythmic, and I want to use Rhythmic, and I don't want to use NinjaTrader brokerage at the moment, right? So I can't use that key, and I can use my old demo key, and that gives me Rhythmic data, but 8.1 won't let me do that. 8.1 won't let me use that demo key, essentially. And so that's why I can't use 8.1.
At 10:30 a.m. Eastern time, we expect comments.
The other thing that happened with 8.1 under the covers, though, was that they upgraded it to the latest version of the .NET framework, which is actually a really big deal. So especially if you want to do something like you want to integrate machine learning directly into your charts or something like that, so much easier with 8.1, because now you're using a version of the .NET framework that's, you know, the right version, and so these newer libraries will work with it. So there actually was a major change under the cover. So with the different version of the .NET framework, there could be a situation where certain, especially if it was a component that had a lot of GUI elements in it, you could come into some situations where there's small incompatibilities or things would need to be upgraded a little bit to work with the new version of NinjaTrader 8. There was also some changes with how they dealt with like historical data and stuff like that apparently screwed up some like GOMI's indicators and stuff like that. So beyond that, 8.1 isn't really any different. So the question kind of becomes, will the desktop and the web interface just continue to be like two completely separate things, or are they going to like merge at some point, or what's NinjaTrader going to do with them? That's kind of the question. But they still provide the download for the pre 8.1 version, so kind of makes you wonder if they should have just done a major version increase, if that would have been easier. Called it NinjaTrader 9. Maybe not. Okay, let's take a look down through here again. Nothing too interesting. It's been another fast session. I don't know what my deal is, but these sessions I feel like I've been going by really, really quickly past 2 days. I'm a little fidgety. There are some massive bids below us now that we've recovered here, man. Something big had definitely happened today. I wonder if that move caused a bunch of guys to decide to like close positions out or something. Do you think that that could be it? Maybe. I'm wondering if maybe a bunch of positions were closed today, because there was definitely some like massive volume that honestly I don't think completely made sense. But if it was like, well, we got to move down and we got a good profit and we're gonna take it, you know, instead of leaving it on for another week for it to go nowhere, I think that makes a lot of sense. I'm going to say that in the interest rates channel in Discord and see what these guys think.
Shortly expecting comments from Feds Barkin.
I agree. It would have made more sense if it was 9 after several things that did not work in 8.1. I haven't had any reports of problems with my indicators, so I took a look at what changed and it shouldn't have affected anything. So, and I did test them myself, but only like loaded them all up and everything, and that was it. Okay, well, so for the last 3 minutes, there was this other story I wanted to check here. Zero Hedge says, the AI revolution, a repeat of history? The artificial intelligence or AI revolution is upon us. The financial media and headlines are abuzz with stories of generative AI and subsequent industrial revolution. Not surprisingly, attention is turned to AI with the launch of ChatGPT. The benefits are already apparent with the incorporation of AI into search engines. Even TikTok videos on making $1 million using AI suggest why stocks associated with AI surged in recent months. The Industrial Revolution is often considered a continuous event from the 1800s to the present. However, it is better understood as a series of paradigm shifts. The first, which began in the late 18th century, was propelled by mechanization and steam power. Mass production electricity in the assembly line fostered the second, which ran through the early 20th century. The third, which began after World War II, introduced giant leaps in space exploration, computers, automation, and information technologies. The fourth paradigm shift is occurring now. That revolution encompasses the advent of exponential technologies, from artificial intelligence and intelligent machines to robotics, blockchain, and virtual reality. Those technologies have already impacted how we live for over a decade. These booms provide great opportunities as the innovators offered great investment opportunities to capitalize on the advance. Each phase led to a stellar market returns that lasted a decade or more as investors chased emerging opportunities. Okay, we are experiencing another one of these speculative booms as generative AI grips investors' imaginations. The chart compares the dot-com revolution to generative AI. If that analogy holds, it suggests the opportunity to capitalize on the impact of AI from an investment perspective remains. Okay. Now they're going to get into some more technical stuff. And I'm going to just skip. A lot of money will be made in AI before this phase ends, but as with all market phases of the past, the end of the era was simply a function of the realization of valuations matter. So they seem to be suggesting that AI stocks are going to get like overdo it, probably. Like I think there's a very good chance that we have like an AI bust, like we had a dot-com bust, because what are you going to see is like oh yeah, this technology is like super useful, but how do the companies actually make money on it? Because right now they're probably losing money on them. But I guess we shall see. I'm kind of hating this. I have a little bit of a cough, but every time I cough, like nothing happens.
Cooling, but not yet cold.
I feel like I got stuff in my throat, but it's like maybe I don't. Or maybe I just need to drink more water. I don't know. I tell you what, when we were at 30 half, 31, I was like, oh yeah, this is coming back a lot. Now they're at 29 half. Now that we're at 29 half, it's like it sure seems like, oh, they could keep going. Okay, Barkin is speaking.
Implied in the statement from last meeting.
Sounds hawkish, to be honest.
Fed's Barkin says a loss of data until the June FOMC plus the debt ceiling. Fed's Barkin.
I'm just keeping an eye on it here in case Barkin moves some.
And encouraged by the resilience I've seen.
I guess I didn't get too much into the AI thing. I was just thinking, I think that the amount of power and computing resources that goes into these AI models is probably not making up, even with the subscriptions. They're probably losing money. And, everybody's concerned about the robots coming and taking our jobs. Probably what's going to happen is they do come in and take jobs. Like there's going to be a lot of jobs where one person can do the work of like 30. Yeah, but that doesn't mean that those 30 people will be without jobs. It's just they're going to be doing something different. I mean, like think about it in futures trading, because really we're like, I think it'll probably go very similar to the way that it went for market makers, right? Like you can't compete with the robot, man. You just can't. You can't compete with the robot. But let me ask you, is there more or less opportunity overall in the market than there was back in the 70s and 80s before the robots?
The most concern on commercial real estate.
I think that there's actually probably more people trading right now than ever before.
Real estate is not an unknown vulnerability, but it is one I am.
Are the people actually making money? I don't know. Did they ever? I don't know. Right. But I actually think that in many respects there are more opportunities today than there were before. And the actually like where the opportunities are kind of become more obvious because of the robots. Because it's like, you know what the robots can do and what they can't do. And so you just step into the situations where you know that the robots suck at what you're talking about, you know?
Real estate loan exposure.
Like what's going to happen? What I think ultimately ends up happening is everything that the robots can't do ends up becoming more valuable. And that includes on the art side. Is like, so like you can come in and generate a song and make it sound like a top 40 song, right? Well, I think that if that goes on long enough, what will end up happening is people will acquire a taste for the for music that is not like what the AIs generate.
My unemployment rate forecast to come down.
Because the stuff that the AIs generate will be so ubiquitous and they'll be tired of it. And they will appreciate the stuff that is
the job market is still quite
unique
and not softened as expected.
I think that's probably the way that it goes. Because you're not going to have this situation where like nobody's working. Then, I mean, you're going to have a depression, right? So something's going to give there. But I think that what it's going to be is that people just move into different types of jobs.
Downturn over the coming quarters.
They won't be employed by Home Depot. They just fired a lot. Yeah, you know what? I don't...
Feds Barkin says, but when it comes to downsizing...
I'm not... Oh, you know what? I need to mute that. I haven't been impressed with really either Home Depot or Lowe's lately. So I think if they're doing poorly, it's... Well, and Home Depot is the big news today, right? Because they did terrible. But... I don't know if they've actually got good variety of stuff right now. Okay. I kind of feel bad at the moment because I feel like I've checked out. This is definitely not going anywhere now. You know what? Let's think this through a little bit again. Because I remember it being at 3,545. Like, really, if I had done anything today, I might have been able to make $10, $15, which isn't that much. It would still be a win, but like I could have just as easily have lost just as much on the pullbacks and freaking out on the pullbacks and stuff. So I think that in the end, I'm okay with my decision to just not trade it today. I'm still mad at myself, even though I don't think it matters, but I'm still a little mad at myself for being a little bit late today and stuff. I don't know what the deal is with that. Sometimes maybe I'm just sick and... Sorry, my microphone arm here is not quite where I want it to be. That's interesting. Barkin says that the last statement was one of optionality. It seems to me that these guys are pushing back today against the idea that we just had the last rate hike in the cycle. That they are still trying to keep the door open for an increase in June. That seems to be what we're getting here today from them, huh? Yeah. He's right. The lesson from the 1970s is don't quit too soon. That's something that I don't think people are realizing. It's like they think, okay, so now we've gotten things down and then like you end it, right? But like what happened in the 70s is they kind of were like, okay, it's over. And then the economy started going down, and so they reduced the interest rates, and then it came roaring back. So like if there's going to be like a little recession at the end of this year, it could be rough because the Federal Reserve may not end up doing what people want them to do. There's a little bit of a sell there. Although I would say that the Treasury, the volume and so forth, is very much acting like it is now in a market maker chop kind of area. So we should just call it that. We should just call it market maker chop. Which is to mean when the market makers kind of make price more random to try and, you know, so that they can make money. Market maker likes what they see. Well, I would have to think that there's a couple of market makers out there that have a little bit more inventory on than they would like at the moment, right? So they're likely to keep it active. Like it's going to move around a lot and make you think that it's going to do something and that it's going to go down further. Because they need somebody to buy it lower from them to wash it, you know, so that they can wash out their position. Because you're going to be long from somewhere, you know, if you want to get long further down in here, you need some more, you're going to need to trick more people into selling it on a continuation and then bringing back up and selling some of it up here. Yep. Yep, volume that doesn't move the price anywhere. Thinking, well, I wouldn't try and fight against them. I would just try and pick up a scrap here or there. I don't know, man. There was a block sell right there. Maybe there's more to this. That was a lot more selling there than I would have expected. I just read a thread on Reddit that was this guy saying I quit a 6-figure job to trade full time. And he says that he saved 3 to 5 years of expenses. So really what happened is he's just making less now so he can trade. Well, that's one way to do it. And maybe I would do that if I didn't have a family and a house and all these other things. man. They're talking about price patterns on charts, so I think that he's gonna do it for another 2 years and then go back to his day job. Hate to say it. I didn't read anything from that guy that suggested long-term success. Don't tell him I said that. You don't want to screw it up for him. He'll come back and blame me. It was all your fault, Seth. You made me stop believing in myself. You know what? Like, we had like that really aggressive sell and everything, and now it's like it's doing nothing. Is a full-on like me some cheese as a market maker day. I think it's a little bit too early to call it that yet, but that sure is starting to look like it, isn't it? I don't know. It could end up being a trend day, but it certainly seems like that the market makers are injecting a lot of randomness into it now. The S&P 500 is like still a mess, so but you know what, like, let's come back tomorrow. We may be looking at a very different market tomorrow, right? Like we may shift into a market that cares a lot more about the debt ceiling, and that could be a really complicated thing to sort out. So don't get too hasty. Wow. Well, that was weird. I've been waiting to see if I could cough anything up today because I felt like I had something in the back of my throat, but like what I coughed up tasted like battery acid. Should I have not shared that one? so like, should I share more gross stuff? So yesterday, I've been getting a lot done after work, man. None of it is related to the stream. If I can work this hard on the stream, then that'll be really good. But no, it's been on the yard. So I go and I clean the garage out a little bit, do some exercise just to do some cardio, and then did some wheelbarrowing dirt up to the garden. And you know, like when that happens, like the nasal passageways open up and it feels better, and like I feel like it helps you get like a really good exercise session after you've been sick. I think really helps. Okay. But I don't know if I got enough water, because when I blew, because what happens is, you know, when there's less water in it, the snot that comes out is more white. And man, when I blew my nose after all of that, the brightest, like bright white stuff came out. Really gross. Really gross. So now that you have that mental image in your head, I think that you should be able to have a good trading day for the rest of the day, right? Yeah, let's see. Everything that I'm getting up now is clear, which means that I'm over it. Anything that I'm having now is probably either allergies or just, you know, my body's still producing too much snot, but I think I'm over this sickness. Work at a hospital? What? No. I'm sure that someday I'm a little concerned that someday I will die from cancer. I don't want to think about it too much because, you know, I think that those kind of thought patterns can be bad for you, but I think there's a good chance that I die of colon cancer. I think it'll be a long time from now, but like maybe when I'm 80, die from colon cancer. I'll still be here on the stream. I'll stream from the hospital. Just stream from the hospital. Get medical insurance. I think we're okay there. All right, well, yeah, kind of a weird session, but you know, when we get close to that rollover is a time period where I often have a lot of trouble. It seems like I'm reading these flows a little bit better, so I'm wondering if next time around I might be able to take advantage of what happened here better. Oh, I work for a Medicare exchange, which basically means that they can find they can go and it's a website where you can go and find plans that qualify for government Medicare coverage. That's what that is. I don't really touch the business side of it anymore. Like there used to be a lot of stuff where I had to know all of these rules about different things about the industry, but these days it's all technical stuff because it's all about just keeping the systems up. Yeah. Okay, I gotta go. Well, I don't gotta go. I could stick around for another 5 minutes, but we might as well end it here, right? Okay. Well, this is interesting session. Some big volume came through here. Big flows in the treasuries. So we'll see. Anyways, I'll see you guys tomorrow. In the meantime, stay excellent, team.